Good evening, everyone. Thank you for joining us this evening. This is the I guess fifth maybe in our Explainer webinar series. So appreciate everyone tuning in. My name is Jenny Mattingly. I'm the Vice President of Government Affairs at the Partnership for Public Service. And for those of you who aren't familiar with the partnership, we're a nonpartisan nonprofit working to build a better government and a stronger democracy. We do that through our policy work, through leadership development, training, workforce programming, and really convening conversations like this one to help support the federal workforce. So we're here today because we know so many of you have questions about your retirement and healthcare and other benefits and how they are impacted by some of the executive orders and actions that have come out over the past few weeks. And so a lot of concern and anxiety that we're hearing and confusion around these. And hopefully we are able to give you some insights today on those issues. And we know it's all happening quickly without a lot of time to work through it. Although I will say, for those of you who have, quick side note, been thinking about the fork in the road email and the so-called deferred resignation, that has an indefinite timeline at this point. And I think guidance has been updated on OPM's website because of a pending lawsuit. So I know some of the folks I've talked to had been asking about the deadline for that, and that has been deferred at this point. We also know that a lot of you listening in tonight work in the government and really care about public service and are really concerned about how these actions will impact you, the people you work with, and also the missions of your agencies and the people who are served by your agencies. So we're hoping to help give you knowledge to figure out and work through this as well, to support you as best we can through resource sharing. We've got some plain language explainers out there, and we'll continue to do what we do as a hallmark of the partnership, which is share the stories of the work that you all do as federal employees for the country. So just before we get started, I do want to thank you for your service and know that we hear you, we see you, we support you. So with that, I'm going to make a few quick housekeeping notes, and then we'll dig into today's content on retirement and other benefits. Before we kick things off, the disclaimer as usual, the content provided during this session is for informational purposes only. It's general and provides an overview of the typical processes around various employee actions and benefits, and it's not intended to provide any legal guidance. And if you require legal advice, we recommend consulting with a qualified attorney who can assess your unique circumstances. Now we're going to dig into these issues. We're analyzing them in real time. Some of them leave more questions than answers, so we'll try our best to get you good information. But tonight, I'm going to ask our guest to introduce herself in a moment. But before we do that, reminder that there is a Q&A function. It's anonymous. You can submit a question through there, and we'll work to get through those as well as some of the ones that were submitted ahead of time. And we won't answer every question tonight just because we don't have the ability to go through all those, but we do have more explainer series coming, and these are posted. They're recorded and posted on our website. So you can always go back to these or share them with others. And finally, while this discussion is geared toward current federal employees, it's an open forum. So I know we may have folks from other communities, private sector, media, good government groups, and everyone is welcome here. We just want to flag that those are not the target population of what the type of information we're talking about tonight. It really is geared towards current federal workforce. And then again, if you have a question isn't answered tonight and you have more specific individual circumstances, please reach out to your agency HR staff or seek legal guidance from an outside attorney. And just remember to continue to support each other. And so Tammy, with that, I would love to ask you to briefly introduce yourself before we dive in.
Thank you, Jenny, and thank you for inviting me to come. I'm here on behalf of the National Active and Retired Federal Employees Association, and they've been very actively watching, advocating, and trying to make heads or tails of what we've been dealing with. And I say we because I'm kind of involved in this, even though I'm outside the government. But my email box has been full daily, and I counsel federal employees on retirement issues, and I teach retirement planning. So I've been doing this since 1985. So I'll let you do the math and figure out that I'm a senior citizen, but I'm very experienced in this, and I'm still actively working with employees, and I'm glad I am, because I think you need someone with some experience to kind of sort out some of these details, because I was talking to my colleagues this morning and we are at ourselves, like asking questions and trying to make a
That's right.
sense and making sure that we're giving out good information. And we are not afraid to say, I don't know, because there are some things that we don't really know for sure. And I think that's part of the problem. And I think that's why so many of you are listening to these broadcasts, and thank goodness for them, because they're very helpful. And I think every time you listen to something like this, you're going to hear a little bit more. And I think as time goes by, you're going to finally feel like, okay, I'm ready to make that decision. Now, if you've already signed the acceptance letter, that's fine, because this will help you understand your options for retirement benefits. But if you haven't, as Jenny mentioned, they did put an indefinite sign-up time frame on it. So I don't know, if it was me, I'd probably delay this until I absolutely had to accept it, to see what unfolds and what happens with all the legal actions as well. So anyway, with that, I'm with NARFE, and I have my own company, Retire Federal, and I'm ready to go.
Great, thank you. And I was going to introduce my colleague Carrie, who we'll also see on screen from time to time as she's managing the chat function, and we'll bring them. So I'm guessing there's a question or a point already.
Right. I'm sorry to pop in so quickly, but just in the time since we have started this webinar, I did see a news alert that the pause on the resignation plan for federal workers has been lifted. We would just encourage you to keep track on, as everyone has said, this is a really evolving situation. I would expect that more information would come out on that from OPM or from your agency's Human Capital Office. But just wanted to provide that brief update and then let Tammy get to all of the good stuff she's going to talk about.
And Carrie, thank you for that. And that just goes to show things are moving so quickly that you have to, as tough as it is, all of us are trying to stay on top of things. And so making sure that all of those of you who are listening are staying on top of some of these changes, because of lawsuits and other things, some of the executive orders and guidance are being impacted and change from day to day in some respects. So it's good to keep an eye out on what's going on as well. So Tammy, why don't you have some slides you're going to share with us, and the goal is to set the stage of what we're really talking about and give folks sort of a visual so we can see the different types of circumstances.
Okay.
And do you want to go ahead and walk us through?
Yes, I would love to. And I thought this might be a good idea so that we can all kind of start with this on the same page. And what I want to do is to go through the different types of retirement that you might be thinking about, because we have the situation with the Voluntary Early Retirement Authority. Some agencies are making that clear that that's part of the deal. Some are a little bit more vague. So I would suggest, if you're looking at retiring under the VERA, and I'm going to show you the age and service requirements and what that looks like in just a minute. But if you're thinking about that particular type of retirement, I would check closely with your HR office to make sure that that is what's available. And I'm going to point out a few little things to be aware of when it comes to that, just in case, they don't offer it as a VERA. What could happen in that case. So I think that's important to go over these different ways that you can retire from federal service. So let's go ahead and start with the first slide. Okay, this is probably the best situation to be in if you're currently eligible just to retire. This is optional. We call it optional immediate retirement. You probably just call it retirement. This is when you come into federal service and somebody says, when can you retire? This is the age you have to be. This is how much minimum service you would have to collect what's considered an immediate retirement. Now, that word immediate, because I know these are words we use in HR, right? So I want to explain some of these words because they're probably not familiar to all of you. So when your HR specialist says something about immediate retirement, that means when you separate, when you resign, retire, whatever you're doing, when you leave federal service, within 30 days of your separation, that retirement's going to start. So you'll start getting benefits the following month. And the opposite of an immediate retirement is deferred. So a deferred retirement, not to be confused with a deferred resignation, but a deferred retirement is whenever you leave federal service and you're going to have to wait sometimes years before you can claim that benefit that you've earned. So I'll show you the deferred benefits in just a few minutes. But here's the age and service requirements for an immediate retirement. So let me go over those first. And then there's some other important information on this slide I want to share with you as well. So when you see those minimum age requirements, the first thing you see there is MRA. And I think most of you probably by now understand that MRA stands for minimum retirement age. And if you were born in 1970 or later, that's 57. If you were born before 1970, it could be 56 and 10 months or 55 even, depending on your year of birth. And if you're not sure, all of this information is on opm.gov under the retirement tab, and you're going to see FERS information highlighted, and you can find more out about these minimum requirements. So when you reach that MRA, or if you're already there, do you have 30 years or more service? If so, that's what I call full retirement, right? You've got a full career of service, you're old enough to retire. It's just a matter of, are you financially ready? Are you mentally prepared? And I think when something comes on us so quickly, it's very hard to be mentally prepared when you just found out about this less than a month ago, and you may not have really been thinking about retiring in 2025. So I know that's really difficult, and it's caused a lot of unsettling feelings with employees. Anywhere from people have been telling me they're not sleeping at night. And then there are folks who say, wow, this is kind of coming at the right time because I was going to go out this year anyway. So now maybe I'll stay home and get paid till September, who knows. So, but I think for the most part, we're not looking at this as a pleasant surprise because it's just too unsettling. Now that third column or fourth column that says FERS supplement is kind of highlighted in blue. If you don't know what that is, when FERS was created, Congress knew that they wanted to create a retirement system that was comparable in value, comparable in age and service requirements to the older civil service system. But of course, FERS is Social Security, the FERS basic benefit, and thrift savings plan. So Social Security is not payable, at least not the retirement part of Social Security, until you're 62. So you notice it says yes under the FERS supplement if you're going out under age 62. So if you're MRA with 30 or more years, or if you're age 60 with 20 or more years, you'll be entitled to this extra benefit, this extra money that's included in your FERS retirement on top of the basic benefit. But the supplement is temporary. It's only payable until you turn 62, and then it stops. And then you can apply for Social Security if you're ready, or you can still delay claiming Social Security all the way up until age 70. Now, and also the last column talks about your health insurance, your life insurance, the dental and vision. All of those benefits can follow you into retirement. They cost the same as they do while you're working. Life insurance has a few choices you have to choose from, and some of those can add a little bit to the premium. But for the most part, these benefits will follow you into retirement. Now, with health benefits and life insurance, you have to be covered for the last 5 years of your career. Doesn't mean you're in Blue Cross for 5 years. You could have switched plans every year, as long as you're in that umbrella of either FEHB, or if you're a postal employee listening, now you have PSHB. So as long as it's a combination of that for 5 years. And even if you're covered under a spouse's federal health plan, you're still covered. So that still counts as your 5 years. Okay, now there's another category. I put it in red at the bottom of the chart. It says MRA with 10. And I put the 2 asterisks there because that's a reduced benefit. And if you've heard people, or if you yourself are saying, well, I want to retire, but I'm going to postpone my retirement application, that's the type of retirement that gets postponed. And the reason is because you're still eligible for an immediate benefit. So for example, if I'm 58 years old and I have 15 years of service, I'm eligible to retire because I'm past the MRA, I have over 10 years of service, but I'm only 58 and I don't have 30 years. So that type of retirement we call MRA plus 10, and it's going to be reduced by 5% for every year that you're under 62. So if you look at that computation I have highlighted in yellow, I'll use that example with 15 years. So 15 years is my length of service. My high 3, let's just say it's 100,000 to make it simple. So 15%, because we multiply it by 1%, of 100,000 is $15,000 a year. So if I was 62 years old or older with 15 years, I would get $15,000 a year. That would be my retirement based on that length of service and that high 3. But if I was 58 years old, I'm 4 years under 62. 4 years times a 5% reduction is 20% less. So instead of $15,000 a year, I would only get $12,000 a year, $3,000 less. So to avoid that 5% penalty, I can say I'm leaving this year, but I'm not going to apply for the benefit till I'm 62. Or I could even apply for it 2 years from now and I'd have less of a reduction. So when you hear someone say they're postponing their retirement, it's because of the age reduction. If I was 55 with 30 years, there's no postponing. That's an immediate retirement. I'm applying for it. I'm going to start receiving it next month or the month after I leave. Okay, so that's just a short overview of basic retirement eligibility. Let's go ahead and look at the next slide. That's the MRA chart. So if you want to take a quick look at that, if you're not sure what your minimum retirement age is, you can see your year of birth, and next to it is the years and months you have to be, or the age you have to be able to retire at your MRA or later. Okay.
And we'll share these slides too.
Yes,
Tammy,
absolutely.
thank you. So for the folks frantically trying to write this down.
Yes. Okay, I think we can go to the next slide. Okay, here's some other things to go with that last slide. This is, again, immediate optional retirement, whether it's the MRA plus 10, whether it's MRA with 30. Your unused sick leave is going to add to your length of service. Doesn't make you eligible any sooner, but it can add some time on. Consider the fact that every 1,000 hours of sick leave is worth about 6 months. 500 hours is approximately 3 months. So you can use that as a little bit of a guide. If you have the GRB platform at your agency that you can use to compute your own retirement, that will convert your hours of sick leave into service credit for you. But just as a kind of a rule of thumb, 2,087 hours is a year, about 1,040 is 6 months, and half of that would be 3 months, and so on. There is no limit on how much sick leave can be added, and there's no minimum. So you might only have 15 days of sick leave, but you might have 30 years, 9 months, and 15 days of service. So if you had 15 days of service and 15 days of sick leave, that gives you another month. And so your retirement is based on whole years and whole months. So sick leave can help you have more money, right? It's not going to be $1 million, but it's going to add some dollars to your retirement check. One important thing is the second bullet that you need to understand. If you take retirement before age 62, especially if you're only 57, you're going to go 5 years with that FERS basic benefit with no cost of living adjustment. I remember a couple of years ago, we had an 8.7% cost of living for retirees. This is right after, everything was going on and inflation was going sky high. And I got emails from retirees who had just left federal service, the year or 2 years before that. And they're like, where's my cost of living? I heard it's supposed to be, over 8%. Well, they weren't 62 yet. They didn't get anything. So if we stay under low inflation, it may not make a big deal. But if we're in this period of higher inflation rates, 5%, 8%, 3%, that's going to make a difference in your buying power, especially with inflation high and your buying power is not changing. So be very well aware of that. The FERS supplement is payable if you're under 62, just as I showed you before, and it's only payable on an unreduced benefit. So on that MRA plus 10, it said no for supplement, so that one does not get a supplement even if you postpone receiving it. Insurance, I already talked about. There's no special authority to retire. If you meet those age and service requirements I just showed you, you can retire today. As long as you're old enough with enough service, you don't need any special authority to do that. So if you're accepting the deferred resignation, and at the same time you're planning to retire before September 30th, or if you're not eligible until after September 30th, apparently you can delay that application until you meet the eligibility rules through December 31st. So again, check with your HR office to be sure that that's what it's going to work for you, but that is the understanding that we get from those frequently asked questions that follow that fork in the road. And that's located at OPM's website if you need to look at it again. And they have a tab for it. It's called Fork. So that's where you'll find it. So that's that. So it's typically any date up through September 30th. However, if you don't meet those eligibility rules until November or maybe even December 15th, apparently you can delay that retirement until the end of the year and still be considered as a deferred resignation, continuing your salary and benefits until that date. So again, that's our understanding. Okay, next slide. All right, so now we're looking at early retirement. So this is the VERA. This is also discontinued service retirement. So there's two types of early retirement. The one that we're focusing on during this deferred resignation is VERA, Voluntary Early Retirement Authority. Agencies are now sending out acknowledgments when somebody puts in their resignation. And it seems like the acknowledgement letter was kind of a template was drafted by OPM. So I see a lot of the same language in those letters. I've seen several of them so far from different agencies. Some of them do come out and say Voluntary Early Retirement Authority. Some are more vague. So again, defer to your Human Resources Office to make sure that you meet the requirements for VERA from your agency, from your particular agency. So make sure that is available.
I know you're going into this, but that's something I've been pointing out to folks that that early retirement has an age limit. It's not for everybody.
Right.
So I think there's been some confusion, at least when I've seen people ask about it.
Right.
Because you can only take it if what you're about to say on this slide, if you meet those requirements.
That's right. So when we talk about early separation, you can leave tomorrow if you have 3 years of service, but that's not retirement. To qualify for early retirement, which is another immediate, this is going to start right away. You're going to get your first check, the month after you separate, or at least it will be backdated to that month because it's probably going to take a while to process these retirements. But in this case, you'd have to be at least age 50 when you separate with at least 20 years of service. So this can greatly reduce the requirements like we talked about before. So you no longer have to be 57, you can go at 50, or you could even go younger than 50 if you have 25 years of total federal service. That has to be at least 5 years of civilian federal employment. The rest of it can be a combination of military service that you've bought back and civilian service as well. But 25 years, any age is one requirement. And the alternate requirement is age 50 with at least 20 years. So you can understand that that really brings down the age and service requirements, making a much larger population of employees eligible for retirement. So I have a feeling it is VERA and it's authorized, but like I said, the language in the fork in the road letter is not the language we're used to seeing. It just says early retirement. It doesn't really go through what a VERA is or how it's different from a discontinued service. So just be careful, especially if you don't meet the regular requirements we just talked about, because this one is only under VERA authority. So if they say, well, we didn't mean VERA, then you might be resigning with no immediate benefits. So just be careful. And that's why I say kind of put off your decision as long as possible, especially if you're in this category. So once we get that deadline set, and I'm not sure if they did specify it in the time we've been on this call, but you can check OPM's website. Maybe it has been updated with a specific date you have to make your decision by.
Now, and Tammy, that's a point I think you made that I've been trying to make throughout too, is just keep asking folks watching, keep asking questions, because again, there's the unsatisfying answer is there's a lot of lack of clarity on some of these things.
Yes.
And you want to make sure that you are getting real clarity on what is going on.
Yeah, and that's very hard to do right now. So I understand the frustration for sure. I'm frustrated myself. Now, let me just distinguish what VERA versus discontinued service retirement is. So let's say we go through this year and you've decided to hang on with your fingernails for dear life to your federal job. And then ultimately we end up with a RIF, a reduction in force. And a reduction in force, someone's going to be losing their job. I can compare this to the BRAC situation where the military bases were closing and reorganizing, and there were a lot of federal employees, nothing of the numbers we're talking about this year, but there were a lot of federal employees facing either moving to a different state or taking a discontinued service retirement because their job was not going to exist anymore in that location. So that would be an example of a discontinued service. It's usually when there's a major RIF, reorganization of some sort. Sometimes it's abolishment of an agency, or one picks up and moves to to a location outside of your commuting area. So this is one that you don't have a choice. So if they say, we're done with the voluntary resignations, the voluntary retirements, now we're facing this massive reorganization, then if you meet these requirements, you would again be eligible for an immediate early retirement under an involuntary separation. The age and service requirements are the same. The FERS supplement is still payable once you reach your MRA. So if you go out at 45 with 25 years of service, you're not going to get the supplement till you're 57, but you will get the supplement from 57 to 62. And then you also would be eligible to maintain health benefits, life insurance, dental, vision, all of that would follow you. You still have to meet the 5-year test. Now, in prior early outs, there have been exceptions to the 5-year test, because if it was in the government's best interest for you to leave, OPM had made an exception saying, well, if that's the only thing stopping you from leaving, we'll reduce that 5 years to whatever it is that you have, as long as you're covered on the day of separation. I don't know if that exception will be extended this time around, but if you don't have 5 years of health benefits coverage or 5 years of life insurance, I would certainly ask that question if that's important to you. And if you don't think having health insurance in retirement is important, go price out a plan on the marketplace, and you'll see what other people pay for health insurance, and you'll think that your federal plan is a great deal, which it is. And also, you can look at the government share of the premium versus what we pay as federal retirees or federal employees, and you're just paying about 28% of the premium. So it's a much reduced amount that we pay. Now, the calculation for this, you can see at the top right of this slide, 1% times your high 3 times your years and months of service, identical to the regular retirement calculation. So that's the same. It's a very simple formula. So you don't really need software or a computer package to calculate that, as long as you know what is your high 3 average salary and how much service do you actually have that's creditable.
Tammy, can I ask a question about that I know folks in the chat have been asking?
Yes.
Does locality pay count towards your high 3 salary, or is it your base minus locality?
Yeah, I love what you said, because I would say yes, because basic pay is locality pay. So your adjusted basic pay is your basic pay. So the locality rates, at least so far, do count in the high 3. So, that is part of your retirement. And the way you can tell that is if you look at your pay statement or your leave and earnings statement, whatever it is you call it, you're going to notice that withholding for FERS comes out of your gross salary, not just the GS-13 step 5, but everything with locality is deducting retirement. You're going to also notice that when you separate from federal service and you get paid for your unused annual leave in a lump sum payment, your payroll office is not going to withhold retirement from that check, because that's not part of your basic pay. If you get a bonus or a cash award, they don't withhold retirement in payroll, because that's not basic pay. So it's your annual pay rate adjusted for locality. Those are the pay rates that are used for the high 3 average. Okay.
Great, thank you.
Yep. So, and it says there that the supplement is payable at the MRA. You're eligible to maintain insurance. And again, no COLA, no cost of living adjustment until age 62. So that means a level supplement, a level FERS benefit until after 62. Now at age 62, the supplement goes away, and that's when cost of living adjustments will start on your basic benefit from that point forward. You don't get any retroactive COLAs since you left. So it's starting in the year that you turn 62. Okay, so that's early retirement, voluntary, which is what we're looking at now, or maybe in the future, if you're still here afterwards, it may turn into discontinued service, but it's the same age and service, same calculation. Okay, next slide. All right, so this is deferred retirement. Now, this is the one you got to be careful about, because we just talked about early retirement. So if you meet the VERA, the early retirement age and service requirements, that's an immediate retirement. A deferred retirement is when you don't meet any of the above. So for example, let's say I'm 48 years old and I have 15 years of service. So I'm not old enough to retire. I don't have enough service to retire, even under the early retirement. I only have 15 years. So I'm going to be eligible for a deferred retirement. So the age I'm going to receive that is based on how much service I had when I left. So you notice here, if I have 15 years of service, I can either choose to take a reduced benefit at my MRA, maybe age 57, or I can wait until I'm 62 and there would be no age reduction. So I have two options there. So think about how much service do I have right now? How old am I? Am I eligible for anything I just talked about? Are you eligible for VERA? Are you eligible to retire with nobody giving you special permission? And if you don't meet either of those, you might be eligible for a deferred retirement, which only has a minimum service requirement of 5 years. So even if you just came on board 5 years ago, you can still collect a deferred retirement at age 62. And again, the calculation, 1% of your high 3 average salary when you left. So if you got to wait 25 years to collect that retirement, it's going to be based on today's pay rates times your years and months of service. No sick leave on this, no health insurance, no life insurance. The only thing you would have would be temporary continuation of health benefits for up to 18 months. In the private sector, that's called COBRA. In the government, we call it TCC, temporary continuation of coverage, which means during those 18 months following the year after you separate, you're going to pay the employer and the employee shares. You're going to pay the full freight during that period of time if you choose to continue your FEHB until you find other health insurance, because it's only going to last 18 months. Okay, so you notice no supplement on this one, no life insurance continuation, no dental and vision. That all stops when you separate. Okay, so that's a deferred retirement. That means nothing the month after you retire. You're going to collect that benefit when you apply for it at a proper age. You know, it's either going to be at age 60 or at your MRA, or maybe not until 62, depending on the service you had when you left. Okay, next slide. This might be one of our last ones. All right, so this is someone who's pretty new, right? You're not even vested under FERS because you have less than 5 years of service, and you might be saying, let me cut my losses and get out of here. I don't know what you're thinking, but if you have less than 5 years of civilian service and you separate from the government, you have no retirement rights yet, because it takes 5 years of civilian federal employment to qualify for any retirement, deferred, immediate, anything. So in that case, you can either take a refund of your retirement contributions, or maybe think you're going to come back to federal service at a later date. You know, that there's nothing in that letter that says you can't become reemployed. You know, once the hiring freeze is lifted, you may come back into federal service and find other work and pick up where you left off. You'll still get credit for that prior service, and you'll add to it if you come back. This also allows you for the temporary continuation of coverage for your health benefits, your TSP. And I did send over the letter, not the letter, but the fact sheet that the Thrift Savings Plan put out. I think it came out today. This is at least that's the first time I've seen it, but it's a very nice summary. It's called Information for TSP Participants Preparing to Leave Employment. So it was written specifically, I think, for this situation that we're in right now. And it gives you information about your contributions and what happens during this period where you're kind of on administrative leave. And basically what that means is you're still getting full salary, you're still getting benefits, you're getting paid your salary just like you always did. You're just not doing any work, which sounds counterintuitive to federal service, but that's what it says. And so you can still contribute to the thrift. You're still an employee, so you're not really eligible for post-retirement withdrawals yet, or post-separation withdrawals. It's still employment, so you're still putting money into it. You can leave money in the thrift plan once you leave, as long as you have at least $200 in the account. It's not going to be closed. It will still earn interest. You just can't make new contributions once you separate. You won't even be able to contribute out of your lump sum annual leave payment. That has to come out of basic pay. If you have a TSP loan and you haven't finished paying it off, You can either pay it off in a lump sum if you're able to. You can continue making payments after you separate. They'll take monthly payments now after you separate. You don't have to pay it off. But if you let it foreclose, you're going to owe tax on everything that you owe that you didn't pay back. So make sure you make some kind of an election if you have an outstanding loan from the Thrift Savings Plan. Okay, so there's a lot more information on here. And the one most important thing it's telling you, if you're leaving government service before the year that you turn 55, if you're separating, retiring, resigning, whatever you're doing before the year that you turn 55, any money that you take out of that TSP account to spend is going to be subject not only to taxes, but to a penalty for early withdrawal of another 10%. So consider if you were taking out $50,000 next year and you were only 45 years old, you're going to pay federal income tax on that. You're going to pay state income tax in many states, and you're going to pay a $5,000 penalty, which is 10% of what you withdrew. So that's a pretty big price to pay. So be careful about TSP withdrawals if you're separating prior to age 55. If you're in the year that you turn 55, or if you're older, there's no penalty as long as you take those distributions directly from the thrift. But please be sure to read not only this little fact sheet, but you also want to get the TSP publication on tax information, very, very useful, and the one on TSP distribution. So they're both longer publications that go into details about all the different options you'll have.
That's great. And we've been putting some of those in the chat for folks too, as we're talking.
Perfect. I wanted to mention one more thing on this slide. Notice at the bottom, it says, stay as long as you can. If you're involuntarily separated, you'll be eligible for severance pay because you don't have any eligibility for an immediate retirement. And that would be true for the deferred retirement folks as well. So if you're leaving with only eligibility for a retirement down the road when you're 60 or 62, you would be eligible for severance pay paid out by your agency up to a year. Now, not everyone's going to get a year of severance pay. It depends on how much service you have, how old you are, and those are factors that tell you how much of that severance pay you'll get. I didn't have time today to go into how that's computed, but there is that information on OPM's website, and I put a link to it here on the slide. So if you download that PDF of the slides, you can click on that link and it'll take you right to the severance pay information.
And Tammy, that's actually leads into a question on my mind that I think others have as well is, you know, in this slide, you're talking about the last slide, it was resignation, which to me implies that the person decided to resign voluntarily.
Right.
But with an involuntary resignation, we talked about it for the discontinued service retirement, but if you're below retirement age, you're earlier into your career, you're RIF'd or, you know, otherwise separated from service. What happens to your retirement benefits at that point?
If you have less than 5 years?
If you have less than 5 years, or if you have, say you're 10 years and you're RIF'd, does that become a deferred retirement or?
Yeah, if you're RIF'd or even if you're fired, you know, I know that's on the table for some employees as well. So if you're RIF'd or if you're fired, you can still collect regular retirement, deferred retirement. If someone is fired for cause or misconduct, then you can't do discontinued service retirement. That's the only one that's off the table. So if you knew that was coming and that was not going to be a major RIF situation, but you were actually going to get fired for whatever cause they might come up with, then go ahead and resign or retire earlier because you don't want to lose that entitlement to retirement in that case. But voluntary retirement, unless you commit treason, which none of this is an act of treason, let's hope. So in that case, that's the only time you would forfeit your retirement. You know, we've seen cases of that made the news over the history of our civil service, but that's pretty rare.
Got it. No, thank you. That's helpful. One of the things, just to clarify too, another point for folks are the health benefits. You mentioned people on admin leave keep receiving health benefits. That's still there. But if they are separated, if you're RIF'd, it becomes the same as everything else. It depends on your years of service as to whether you qualify for keeping health benefits, because that would go into the retirement piece.
That's right. Just think of immediate retirement is when you can keep health benefits. If it's deferred retirement, health insurance would only be temporary for 18 months.
Got it. That is helpful. One other thing too, we've talked a little bit about less than 5 years, more than 5 years. Does it, some folks are on probationary periods, so that would just qualify as the less than 5 years slide that you showed.
That's right.
Okay.
Yeah, so in
And
that case, the money that you've paid into FERS, and being a new employee, you're paying 4.4% of your salary into the FERS retirements, or 4.1%, whatever, to 4.4, and it's 4.4. So that's a lot of money in there. So you will be entitled to a refund of that, but you have to apply for it, and it's going to come from OPM. So don't expect it in your paycheck, in that last paycheck. It may take months to get that refund.
And I think that's a great point too, to remind folks of, whether you're applying for retirement benefits, whether you're, applying for that refund. Not only is it your agency that provides paperwork, it ultimately, these things get processed through Office of Personnel Management. And so depending on the volume that's coming through, it
That's
could
my
take a
fear.
while.
Yes, I worry a lot about that, because especially when we have this deadline for everybody, that could be thousands
Yep.
and thousands of, it already is thousands of people who've accepted it. And if all those retirements hit OPM in the same month, they just aren't equipped for that kind of volume. This is a
Right.
tedious process, because, as I've been telling you, there's different rules for age and service. Some people have gone through a divorce where a former spouse is getting part of your retirement. They got to, take that through the court-ordered benefits section and review it. Some of you have service with 3 or 4 different agencies, and all that information has to come together and be reviewed and analyzed. So these cases can take some time to process.
That's, oh, go ahead. I see Carrie coming on screen. I'll pause my question. Carrie, go ahead.
Thanks. And just a quick question for folks who might be not remembering off the top of their head what their total length of service is. Where can they go to find information about that? And who should they consult for any questions they might have about this?
Thank you for that question. That's a great question. I highly recommend, and you hear this from other people as well. I've heard this over and over again, but I definitely agree with it. If you can, make a copy of your official personnel folder before you leave. I know there's some agencies, especially in the intelligence community, where you don't have that immediate access, and you certainly can't download it if you're in that situation. But if you can, do that. If you can't, talk to your HR, and I know they're busy, they're very overwhelmed right now, and I really feel for them. But if you can, tell them, when you get a chance, could you make me copies of my standard Form 50s, that personnel action statement that shows when I was hired, when I left, when I came back, when I went part-time, when I went to intermittent service. So if you ever had a change in your work schedule, if you ever had a change in agencies, you moved from one agency to another with or without a break in service, I would keep those SF50s, the ones where you got a step increase or a cash award. We don't really need those too much unless you just want them for memory's sake. But the ones that show changes in your retirement coverage, your work schedule, or an appointment or a separation, those are the ones you want to keep, because that's going to prove, that's the evidence. I used to work at the FBI, so we based everything on evidence. That's the evidence of your federal career. If it's not documented, if there's nothing that shows an official accounting of that service, you want to make sure that it counts. So I know that question can be very frustrating for some employees, because they say, well, I know I did this, but I can't find a record of it. And if that record's missing, it could be in St. Louis at the National Personnel Records Center. It could be in your basement or attic where you put a box of stuff together when you left that last agency. Look through there. If you have your employee copies of those SF50s, those are just as acceptable as the one filed in your official personnel folder. So make sure that your career has been documented. If you have service that you're not sure if it counts, talk to HR. They have retirement specialists somewhere in the HR area, whether it's in a shared service center or whether it's down the hall from where you work. Get that information from someone who specializes in retirement, because that's going to give you the best, most accurate response.
And I think, and that goes to the question I was thinking as we were talking, is that at least as I've seen over the course of my career, people don't realize how bifurcated some of their paperwork is. And that's one of the biggest reasons why retirement processing gets delayed, is because employees don't have all that paperwork. Are there, besides their SF50, making sure they have those, are there other things employees need to be thinking about in their packages?
Yeah, thanks for that, because one thing, here's a couple of things where your service computation date, which is on those SF50s, keep in mind that's for leave accrual. That tells the agency payroll when you go from 4 to 6 to 8 hours of annual leave. So for retirement, there's different rules. And let me give you just a few of the most common. So let's say you were hired as a summer hire or a temporary appointment, way back when. If that was before January 1st of 1989, if it was before 1989, you can count that service, but it is going to require what we call a deposit or a payment into the retirement fund, which you can make while your retirement's being processed. You don't have to hurry up and do that now. OPM will hopefully send you information about that, and you'll be able to pay it. If you have military service, if you have honorably discharged military active duty, make sure you pay that military deposit before you leave. It has to be paid before you separate. You can't pay those in retirement. You can't even pay those while your retirement's being processed. So military deposits have to be paid to your agency's payroll provider. If you have retired from military service, full career, retired military, any combat pay, any campaign service that was included with your leave SCD is not going to count for your retirement service computation date. So service comp date, SCD, same thing. So you have to remember that that SCD for leave may include service that doesn't count for retirement in the case of people who are retired from military service, people who had temporary service prior to 1989. And if you had temporary service after 88, it doesn't count. So there's no provision in the law right now to count seasonal work, temporary appointment, anything that didn't have FERS retirement contributions withheld after 88 is not creditable. So just, check with HR. Hopefully there's someone there that will be able to help you at some point. I know they're swamped. I know I've been swamped, and I'm not even in HR, but I've been getting way more emails, way more requests for information than ever before in 35, 40 years.
Yeah, and that's, and it goes back to what we're telling folks, because a lot of people haven't downloaded their personnel files, um, or their SF50s. And so that's one of the most important things everyone can do anytime, because this
Anytime.
always, when you get to retirement, there's always a lot of paperwork challenges with that. One of the other questions I've been seeing from folks is whether any of the, deferred resignation or other things going on, do any of those have benefits changes to them? As far as I know, nothing's been changed in terms of legal benefits that people receive.
So far, no. I mean, there's a lot of wondering, and there's a lot
Mhm.
of people gathering together, organizations that are trying to file lawsuits and try to deem some of this illegal or it's unconstitutional in some cases, but none of that has been resolved yet. So that's why we say keep watching the news, keep watching opm.gov, because that's where I'm seeing a lot of these updates. And of course, your own email box, from your agency, they may be giving you information that's changing on a regular basis here, because this is really an evolving situation that unfortunately you have to make a decision about without having the full story.
That's right. And so I think, at this point, going and asking again questions. There are folks like you, Tammy. There's other resources out there. I think, we've shared maybe some of your articles that you've written in the chat and other things, because there are places that people can go and ask questions. And that's what you've just got to keep doing as you make sense of that.
Yep, that's for
Are
sure.
there, yeah, as we're getting closer to time, because I know we're going to have a little survey for folks on topics. But Tammy, are there anything that you're hearing from folks that we haven't covered today, or that we should cover?
Well, the one thing I saw somebody was asking about the applications. So when you're accepting this deferred resignation where you're supposed to return the email back and just put resign or resign/retire in the subject line, that is not an application for retirement. So there's a separate retirement application. It's a standard form 3107. You can find that on OPM's website. So if you're retiring under either VERA, voluntary early retirement, or regular retirement like we covered in the first slide, that requires a standard form 3107 to be submitted to your HR office. They have to put together a package of paperwork from your personnel file that they're going to put together and send to OPM showing your length of service, showing your health insurance and life insurance coverage, that it's all in place to continue into retirement. So there's a whole process to retirement. It's not just accepting the resignation. So be sure to fill out the 3107. I would say send it in as soon as possible, because as you pointed out, Jenny, the HR offices are going to be swamped. OPM is going to be swamped. So you kind of want to get to the top of the heap as much as possible, because and expect delays. I mean, I think, it's normal to tell someone to expect delays in retirement processing. It's going to happen. I have no doubt that there's going to be delays in processing. And I'm saying delays 6 months to a year to get your full benefit possible. Hope for the best, but prepare for the worst is the key word here.
Right. And that's, and I think that's a good reminder to folks that none of this is immediate with the processing. And you raised such a good point, is that there really is an agency process first, even though OPM ultimately is the one who's processing things.
Yes.
The agency has to go through a
Yeah.
large portion of this because they hold your files. Carrie.
Right.
Just a quick follow-up question for Tammy on that SF 3107 form. If folks are anticipating being RIFed or having any change in their status, not of their own volition, should they preemptively fill out that form? How should folks be considering when and how to submit that?
Yeah, I would recommend that if you're thinking at all about retirement, download the form. It's on OPM's website. Start to fill it out. Make sure you know what it's asking you. Make sure you understand the questions. Make sure if you're married, you've evaluated the survivor benefit options that are available there, because that's going to change the value of your retirement to elect a survivor benefit for a spouse. If you've gone through a divorce, make sure you understand any benefits that might be payable from your FERS retirement to your former spouse and or survivor benefits. So I think it pays to kind of go through that application, look at everything they're going to require you to attach to it, like a marriage certificate, a divorce decree, military records. So I think anyone who's even thinking about taking this should review and start to fill out the application. But until you know for sure that you're leaving, don't turn it in, because it may be difficult to rescind it. I mean, normally with a voluntary retirement, up until the day of separation, you can say, give it back and I change my mind. But if you accept the resignation, it's telling you right in that letter that rescinding it's going to be very difficult, if not impossible. So be careful about making any decisions that you can't reverse.
That's right. And again, making sure you have all your ducks in a row with paperwork ahead of time as well.
Yep.
Just because, but again, it's tight time frame to make decisions on. And
Absolutely.
These are things that employees can control, is making sure they have all of that. So,
and most agencies, whether it's Employee Express or MyPay, that electronic system usually has a place there where you can look at retirement application and what the agency requires you to do if you're planning to retire. And I would think that HR offices will put updates there as far as what's happening this year as they get them. So definitely pay attention to any emails that you're getting from HR, anything that you're looking at on OPM's website. That's going to be updated on a regular basis.
great. Well, we will stop there because I know we're getting to the end. And Tammy, thank you for all this great information. I know I've been also flooded with questions about this, so I was really excited that you're joining us to walk through, because it's just, until you're at the stage you have to think about it, it's not something that people think about. So this is very, very helpful. And before we go, we'll do a quick survey for folks, and I'll talk about that. But Tammy, we'll be posting this. I'm sure you'll get other questions, but I appreciate you coming on and helping us make some sense of what's out there and what's going on. So
very happy
great.
to do it. I'm glad that I'm available. And if you have questions, please feel free to get back in touch. And check out, OPM's website and YouTube, because OPM has a YouTube channel, TSP has a YouTube channel, and they have nice videos there helping walk you through the application process, all those things. So look for as much as you can, learn as much as you can. I was talking to my colleagues today, and we were saying we're learning something new every day, and we always do. I mean, we never can say we know all of this, because it's a lot to know.
Yep. And there's a lot of resources out there. So that's great. Well, recognizing that we are almost at time here, I did, for those of you on the line, if you'll indulge me, we've done a lot of sessions already. We've received a lot of great ideas about future sessions going forward, but we just wanted to take the time for those of you that are willing to take an anonymous 3 quick questions poll to help us see what sort of topics that you're interested in the future. They'll ask about start times for webinars because we recognize everybody's busy and we're doing these in the evenings to make them easier on folks, but just curious what works for folks. And then there's another question as well about frequency of webinars as well. So we're really trying to meet the needs and the questions that we're hearing from everyone across federal government, and trying to get you together, show support, provide some place to come for some answers and information. So my colleague Haley is going to initiate the poll in just a second here. Again, your responses are anonymous, and they're just being used to inform some future topics. So we'll give you all a minute or two to check out the questions and take the poll, but really appreciate your input because we want to make sure what we're doing is answering the questions you have. And so Tammy, you and I will sit tight for a moment while everyone's answering.
Yeah. Can I say one more thing while they're
Yeah, absolutely.
I just noticed somebody was saying about TRICARE, and TRICARE is the health insurance for military retirees and family members. If you're covered under TRICARE and you jumped into FEHB before you retire, you can count TRICARE as part of the 5 years, but you have to be in FEHB on the day of retirement. So, the next open season is not till November, so that's going to be difficult to get into it if you're not already in it.
That's right. And that's a good reminder that to make a lot of these changes to your healthcare benefits, you have to wait typically till open season.
Yeah, that's why it's nice to plan for retirement 5 years out. So I really sympathize with people who are trying to get all this information together in 2 weeks rather than 5 years.
Yeah, it is a challenge. So, well, with that, I know we are at time. And so again, thank you to everyone for joining tonight. Again, these will be posted on our website at ourpublicservice.org. And again, you can go to NARFE, National Active and Retired Federal Employees, to find Tammy. I believe your email, Tammy, might also be on those slides that we shared. So a lot of places out there. Please, everyone, keep questions coming, keep looking for information, and we'll continue to do that. And we've got some FAQs and other things coming out on our website as well shortly, as do a lot of other organizations. So for all the federal employees out there, thank you again for the work you do day in and day out. And it is really important. And we really thank you for your service. So with that, Tammy and I will say good night.
Thank you.